Hi, I'm Joe Epifanio with England Volkers, and I'm your real estate coach. Today, I have the pleasure to have with me today Chuck Kansi from Security National Mortgage. Welcome to the show, Chuck.
Good afternoon, Joe, and thank you for having me.
Listen, we've talked many times in our episodes about getting a mortgage banker in, and today Chuck has come in and politely enough to answer our questions. So, Chuck, let's just get right into it, okay? Well, there's been some new changes, the CFPB, the TRID, as everybody calls it, the new consumer disclosure. And we could probably do 10 hours on that, but just in a nutshell, what changes has this caused? And I know it's across the whole United States, is that
Correct. That's correct.
Okay.
Everybody's in the same boat. So it's not as if I can offer a product or service that anybody else can't offer as far as CFPB goes. We all play by the same guidelines. The bottom line is that one of the most important issues is the borrower has to have the closing disclosure 3 days before closing, which means that gives them 3 days to review it. You can close on the 4th day. That is going to put a little delay in the closing date, and you have to factor that into your contracts, because hypothetically, let's just say you wanted to close tomorrow. They would have to have that disclosure no later than Tuesday. We build in a 1-day quality control to monitor to make sure everything is copacetic, which means this loan has to be cleared to close Friday of last week, which means it would have to have been submitted to underwriting Wednesday of last week to give underwriting 48 hours to close the loan. And if the property is a mail away, now you have to add a few more days in for that, because then the disclosures have to be sent.
So we're at the closing table, getting ready to close the transaction. We have the buyer here, the seller here, and all of a sudden there's a change on the document. Maybe during the walkthrough we found out something was removed from the house that shouldn't be, maybe a mirror, and it's $500. Can we still close?
It depends on the amount of the credit you're discussing. Anything that changes my APR by more than 1/8%, you can't close. We have to redisclose.
And those 3 days start all over again.
Those 3 days start all over again.
So doing a same day close, I'm selling my house, buying a house on the same day, recommended or not recommended?
Definitely. Even under the old regulations, I wouldn't recommend it. We've done it, but it's very difficult.
It's likely that the person buying the second house could be waiting for that closing.
That's correct. And one of the issues that people have to be aware of, a lot of people are relocating here from up north. They may be selling their house up north intending on paying cash down here. Well, up north, the person buying their home may be financing. So, which means they fall under these CFPB regulations as far as closing disclosures. If they're paying cash down here, they don't fall under those regulations. A delay up north could cause a forfeit of a deposit down here. So everybody has to be aware of, when you're negotiating a contract, even though it's cash, where is that cash coming from? If it's coming from a sale of a property and that property is being financed, be aware of that and build that into your contract dates.
Chuck, I know you do a fantastic job at mortgages, but there's one thing I think we'll both agree upon. Cash is king. These rules don't apply to it, but for most of us that are going to get a loan, we have to understand that the CFPB, what is the acronym?
Consumer Protection Financial Bureau.
I'll get it right yet. It just came into effect October 3rd, so we're all getting used to all this new terminology. The HUD has gone away, right?
It's now called a closing disclosure. It's no longer called the HUD. And previously, the title agent would prepare the HUD. Now the lender is preparing the HUD, delivering it to the borrower.
That makes a lot of sense to me from one point of view, being that you guys are handling all the money anyway and the numbers, so you should generate that form, and then the closer is just following instructions.
That's correct. Another benefit of the CFPB and these new regulations is the fact that the borrower has to have the closing disclosure 3 days ahead of time. So there's not going to be any last-minute financing issues arising. There's not going to be any last-minute closing packages arising at the title company, and they're scrambling to get the loan done. Everything is going to be done 3 days ahead of time at least.
Perfect. Well, I think that clears it up for a lot of people, but as I said, we could spend 10 hours on this subject.
Anytime.
All right, everybody. We're going to thank Chuck Kansi here at Security National Mortgage. I'm Joe Epifanio, the real estate coach at England Volkers. By the way, you can reach Chuck Kansi at the number below on your screen. You can reach us at the number below. And by the way, send us your questions and we'll try to get them answered on the next episode of Meet the Real Estate Coach with Joe Epifanio here at England Volkers.
Okay, cool.